Imagine the freedom of being your own boss. Setting your hours, choosing your projects, working from anywhere. This is the appealing dream of freelancing for many independent professionals. But with great freedom comes great responsibility. Unlike traditional employees, freelancers often lack employer-sponsored benefits, particularly health insurance, a critical safety net. The thought of unexpected medical emergencies or routine doctor visits without coverage can be daunting. A simple broken bone or a sudden illness can lead to financial catastrophe. This guide aims to demystify health insurance for freelancers in 2025, offering clarity on plans, deductibles, and out-of-pocket costs. It's about protecting your health and finances. Navigating the complex world of health insurance can feel overwhelming. Many freelancers simply don't know where to start or what questions to ask when choosing a plan. The goal is not just to have insurance, but to have the right insurance for your unique circumstances. One that provides peace of mind without breaking your freelance budget. Let's explore the essential components, starting with the fundamental building blocks of any health insurance policy. Understanding these terms is your first step to smart choices. For many freelancers, health insurance is an investment in their future. It's about safeguarding their ability to work and thrive, even when life throws unexpected challenges. Without a structured benefits package, freelancers must proactively seek out and understand their options. This guide provides a roadmap to help you confidently secure your health coverage. The year 2025 brings new considerations, but the core principles remain. It's crucial to stay informed about available plans and how they align with your health needs and financial goals. First, let's talk about premiums. This is the regular payment, usually monthly, you make to your insurance company to keep your coverage active. It's your entry fee. Think of your premium as a subscription. You pay it whether you use medical services or not. It ensures you have access to benefits when you need them most. Lower premiums often mean higher out-of-pocket costs later, and vice versa. It's a delicate balance to consider when budgeting for your health plan. Next, let's understand the deductible. This is the amount of money you must pay for covered healthcare services yourself before your insurance plan starts to pay. For example, if your deductible is $3,000, you pay the first $3,000 in medical costs each year. After that, your insurance will begin to cover a portion of your expenses. High deductible plans usually come with lower monthly premiums, making them attractive to healthy individuals. However, be prepared to pay more if significant care is needed. Conversely, a plan with a lower deductible will have higher monthly premiums. This might be better for those who anticipate needing frequent medical care. It's vital to consider your personal health history and expected medical needs when deciding on a deductible level. Don't underestimate potential costs. Some services, like preventive care, annual checkups, vaccinations, might be covered before you meet your deductible, depending on the plan. Always check your policy. Understanding your deductible is crucial for budgeting. You need to know your financial exposure before your insurance truly kicks in to help cover significant costs. For freelancers, an emergency fund covering at least your deductible amount is highly recommended. It acts as a financial buffer during unforeseen health events. The deductible resets each year. So, if you meet it in December, you'll start over again in January, paying towards a new deductible for the new calendar year. It's important not to confuse your deductible with your premium. One is a regular payment, the other is an amount you pay towards services before coverage starts. Many plans will cover a small portion of certain services even before the deductible is met, often with a copay. These are important details to investigate. Carefully comparing plans based on their deductibles can save you significant money and stress. Always evaluate the full financial picture, not just the premium. Now, let's look at copays. A copay is a fixed amount you pay for a covered healthcare service after you've paid your deductible, or sometimes even before, for certain services. For instance, you might have a $30 copay for a doctor's visit, a $50 copay for a specialist, or a specific copay for prescription medications. Copays are typically much smaller than your deductible and apply each time you access a specific service. They help share the cost of routine care. Some plans offer copays for certain services even before your deductible is met, making regular care more accessible. This is common for primary care visits. Next, coinsurance. This is your share of the cost for a covered health service, calculated as a percentage. It applies after you've met your deductible. For example, if your plan has an 80/20 coinsurance, your insurance pays 80% of the cost after your deductible, and you pay the remaining 20%. Coinsurance can add up, especially for expensive procedures or extended hospital stays. It's important to know this percentage when evaluating plans. Finally, the out-of-pocket maximum. This is the most you'll have to pay for covered services in a plan year. Once you hit this limit, your plan pays 100% of covered costs. The out-of-pocket maximum includes your deductible, copays, and coinsurance payments. It provides a financial ceiling, protecting you from catastrophic costs. Understanding your out-of-pocket maximum is arguably the most crucial aspect for financial security. It defines your worst-case scenario for medical expenses in a year. When comparing plans, don't just look at premiums and deductibles. The out-of-pocket maximum can significantly impact your financial well-being during a serious illness. Choosing a plan with a lower out-of-pocket maximum often means higher premiums, but it gives greater peace of mind for those with significant health concerns. For freelancers, balancing these components, premiums, deductibles, copays, and the out-of-pocket max, is key. It's a personal decision based on your health and budget. Remember, what seems like a great deal with a low premium might expose you to high costs if you experience a major health event. Always read the fine print. These core terms form the foundation of health insurance. With them understood, you are better equipped to evaluate the different types of plans available to freelancers in 2025. Let's explore common types of health insurance plans. First, health maintenance organizations, HMOs. These plans generally have lower premiums. HMOs require you to choose a primary care provider, PCP, within their network. Your PCP coordinates all your care and provides referrals to specialists. You typically cannot see out-of-network providers unless it's an emergency. This restrictive network helps keep costs down, but limits choice. Next, preferred provider organizations, PPOs. PPOs offer more flexibility. You don't need a PCP or referrals to see specialists. PPOs allow you to see both in-network and out-of-network providers. However, out-of-network care will typically cost you more. Because of this flexibility, PPO plans usually have higher monthly premiums than HMOs. They are popular for those who value choice. Exclusive provider organizations, EPOs, are a hybrid. Like HMOs, they generally only cover care from providers in their network, except in emergencies. However, like PPOs, you usually don't need a referral to see specialists within the EPO network. They offer a balance of cost and flexibility. Point of service, POS, plans combine elements of both HMOs and PPOs. You typically need a PCP and referrals for out-of-network care. With a POS plan, you can go out-of-network, but you'll pay more. It's less restrictive than an HMO but more structured than a PPO. Another important category is high-deductible health plans, HDHPs. These plans have lower monthly premiums but higher deductibles. The main benefit of HDHPs is that they can be paired with a health savings account, HSA. This is a tax-advantaged savings account. You can contribute pre-tax money to an HSA to pay for qualified medical expenses. The funds roll over year to year and can even be invested. HDHPs with HSAs are attractive to healthy individuals who want to save on premiums and take advantage of tax-free savings for future medical needs. However, be prepared for significant out-of-pocket costs if you experience a major health event before meeting your high deductible. An emergency fund is key. For freelancers, understanding these plan types is crucial. Each has pros and cons regarding cost, flexibility, and access to care. Evaluate what fits your lifestyle. Consider your current health, frequency of doctor visits, and preferred medical providers. Do you need a specific specialist who might be out of network for some plans? Also, think about your risk tolerance. Are you comfortable with a higher deductible for lower premiums, or do you prefer more predictable costs? Each plan type suits different needs. Researching your local networks for each plan is essential to ensure your preferred doctors and hospitals are covered. As you consider these plan structures, remember the 2025 landscape. While specific regulations may shift, the fundamental differences between plan types persist. So, where can freelancers find health insurance plans? The most common route is through the health insurance marketplace, established by the Affordable Care Act, ACA. The marketplace allows you to compare plans side by side and apply for subsidies, called premium tax credits, if your income qualifies. These tax credits can significantly lower your monthly premium costs, making health insurance much more affordable for many freelancers. Enrollment through the marketplace typically happens during open enrollment, usually in the fall. Missing this period means you might have to wait a year. However, certain life events, like moving, getting married, or having a child, can qualify you for a special enrollment period, SEP. You can also purchase plans directly from insurance companies. These plans might not offer the same subsidies as the marketplace, but they provide another option. Another avenue is through professional organizations or guilds. Many offer group health insurance options tailored for their freelance members. These group plans can sometimes offer more competitive rates or specialized benefits. Check if your freelance association provides such opportunities. Short-term health insurance plans are also available. These are designed to cover gaps in coverage, typically for less than a year. However, short-term plans are not ACA compliant. They often don't cover pre-existing conditions and may have caps on benefits. Use them with caution. If your income is very low, you might qualify for Medicaid, a government program providing health coverage to low-income adults, children, and families. Additionally, the Children's Health Insurance Program, CHIP, provides low-cost health coverage for children and families who earn too much for Medicaid but cannot afford private insurance. Another consideration for some is COBRA. If you recently left a job with employer-sponsored health insurance, COBRA allows you to continue that coverage temporarily. COBRA can be very expensive, as you pay the full premium plus an administrative fee, but it provides continuity of coverage while you seek a new plan. Exploring all these avenues is crucial for freelancers. Don't limit yourself to just one source, compare and contrast options to find the best fit for 2025. Now, let's focus on choosing the right plan. It begins with assessing your health needs. Are you generally healthy, or do you have chronic conditions requiring regular care? Consider how often you visit the doctor, what prescription medications you take, and if you anticipate any major medical procedures in the coming year. Next, evaluate your budget. How much can you comfortably afford for monthly premiums? Remember the trade-off between premiums and deductibles / out-of-pocket maximums. Check if your preferred doctors, specialists, and hospitals are in the plan's network. Continuity of care with trusted providers is often a high priority. Review the plan's prescription drug formulary. This is the list of medications it covers. Ensure your necessary prescriptions are included and affordable. Emergency care coverage is paramount. Understand how your plan handles urgent care visits and emergency room services, both in-network and out-of-network. Don't forget about mental health services. Many plans now offer robust coverage for therapy, counseling, and psychiatric care. Verify these benefits. Look for plans that offer telehealth services. Virtual doctor visits can be incredibly convenient for freelancers, saving time and travel costs for minor ailments. Always read the Summary of Benefits and Coverage (SBC). This standardized document provides a clear, concise overview of a plan's benefits and costs. Pay close attention to what's not covered. Some plans might exclude certain services or have limitations that could surprise you later. Consider dental and vision coverage. These are often separate policies or riders, but crucial for holistic health. factor them into your overall health budget. For 2025, compare different plan tiers: bronze, silver, gold, and platinum. Bronze plans have lower premiums but higher out-of-pocket costs. Platinum is the opposite. Silver plans are a popular choice because they offer moderate premiums and out-of-pocket costs, and subsidies are usually tied to them. Don't rush the decision-making process. Take your time to research and understand each plan's details before committing. Your health is worth the effort. The right choice today can prevent significant financial and health stress tomorrow. Make an informed decision that empowers your freelance journey in 2025. Once you've chosen a plan, the enrollment process begins. Be mindful of open enrollment periods, as missing these deadlines can mean a gap in coverage. If you experience a qualifying life event, act quickly to enroll during your special enrollment period. These periods are typically limited to 60 days. After enrollment, review your plan documents carefully. Confirm that all details, especially your start date and premium amount, are accurate. Set up your payment method promptly to avoid any disruption in coverage. Autopay can be a convenient way to ensure premiums are paid on time. Familiarize yourself with your insurance card. Keep it handy for doctor visits and emergencies. Understand where to find your policy number and group ID. Utilize your plan's online portal or app. These tools often provide easy access to benefits information, claims status, and provider directories. Don't hesitate to contact your insurance provider directly if you have questions about coverage, billing, or finding a specialist. They are there to help. Regularly review your health insurance plan annually. Your needs might change, and new plans could offer better benefits or lower costs. Stay informed to make smart choices for your health and finances. Securing the right health insurance as a freelancer is a cornerstone of a sustainable and stress-free career. It's about protecting your greatest asset, your health. By understanding the options for 2025, plans, deductibles, and out-of-pocket costs, you can confidently navigate the health insurance landscape and focus on your freelance success.